Hello, my name is Chad Hart, and I'm an extension economist with Iowa State University. And today I'd like to share with you an outlook on the agricultural markets. And so, as we're sitting here in mid-December, the idea is that, harvest is now fully in. We have sort of seen the supply side of the market come in, and now we're really adjusting to how demand is shaping up as we look forward over the winter months and into next spring. And so USDA typically during the month of December, they update their estimates on supply and use, but they tend to really just concentrate on the demand side of the market. That's what we found with the WASDE report this month. Now, when looking at corn supply, the idea is that we did see only one adjustment really when USDA looked at the 2022 crops, so if you will, that fourth column you see here in this table. They adjusted exports down by 75 million bushels. Beyond that, they left everything else the same. So we kept supplies the same. So we're still looking at a yield of 172 bushels per acre across the nation, which resulted in just shy of 14 billion bushels of production this year. But on the demand side, like I say, we did see this adjustment down on the export side. So when you look down at the gray box, which is showing the demand for corn over the past few years, what we've seen compared to last year is that we have seen feed demand back off by about 400 million bushels, ethanol demand by about 50 million bushels, and then export demand is down there now by about 400 million as well. And so that 75 million bushel slippage in exports brought that down to match for what's happening with feeds. We have seen corn, usage, over this past year shrink by about, 850 million bushels. That is sort of closely in parallel with the shrink we saw within production of a little over 1 billion bushels there. So as supply shrink, demand tends to shrink with it. And with that, that meant that we have a little bit more corn that's likely going to be in ending stocks as we end the year. So that went up by 75 million bushels. And with that, USDA lowered the price estimate to $6.70 a bushel. So they lowered it by a dime. Now, as you also see here, I've got the projections out there for 2023 that USDA released with their long-term forecasts back in November. And so I've adjusted it slightly to reflect this change in export demand for this year, but I haven't really adjusted their demand estimates there. So as you can see, they're looking for the potential of a production rebound next year, that we do see, let's call it, less impacts from a drought this coming year, so that we could be looking at close to or above a 15 billion bushel corn crop. But they're also looking for that feed usage or corn usage to bounce back up again. So basically feed and residual bouncing back up that 400 million bushels. Ethanol recovering that 50 million bushels of loss this year. But it's the export side where they are saying that we won't see a full bounce back. And that's the part I really want to concentrate as we look out there today, because they're looking for about a 200 million bushel bounce, but we're down 400 million bushels now. What's driving that? Now, when you look at the soybean market, the idea is that, the same sort of thing, but they made no adjustments here when it came to either the supply or demand side of the soybean market directly. So we're still looking at the same basic tale here of this year. Yields around 50 bushels per acre nationwide average, resulting in about 4.35 billion bushels of soybeans. Demands, the domestic crush, has been slowly growing. It's been the exports, just like with corn, where we've seen some slippage there, in this case of about 100 million bushels. And so everything remained the same with soybeans for 2022. So they held their price estimate at $14 per bushel. And as you look forward into 2023, again, they're looking for basically some growth in production as we look forward to next year. They're looking for some growth in domestic demand. But they're basically saying that exports for soybeans will basically tread water. We'll gain maybe 5 million bushels as we look out there. So they're looking for limited growth on the export markets for both corn and soybeans for the coming year. Now, as we look at that, part of the reason why is because we are seeing more crop production outside the U.S., especially as we look at soybeans. As we look at this table on world soybean production here, you can see that world production continues to jump to record levels basically each and every year for the past few years. And while U.S. production is down, we are seeing growth outside the U.S., especially as we look towards South America, with Brazil and Argentina continuing to grow significant crops and continue to basically reach record levels. In fact, as you look at that Brazilian total for 2022, it well exceeds what we now produce here in the U.S. And so it hasn't been that long ago that the U.S. used to be the largest producer of soybeans in the world. Now we are definitely number two and fairly actually far behind Brazil when it comes to that total production of soybeans. So we've got more competition here in the international marketplace. Now, in the case of corn, so let me stick with soybeans, because as we look at our exports, the reason USDA sort of held firm with their estimate this past month is that we're right on pace, that if we keep to historical trends, we'll export roughly about a little over 2 billion bushels of soybeans as we look out there. So that is a downshift from what we've seen over the last couple of years, but it is holding close to the 5-year average. As you look at this graphic, the blue line shows you our record year in terms of soybean bushels going through the export channels, reaching up there well over 2.2 billion bushels. 2021, the green line, so last year's line, you can see that we started out around average, but then the second half of the year, we got a little boost in sales. We approached those record levels again. Here with 2022, the red line, we're tracking with what we did last year, a little bit above that 5-year average black line. But as USDA is looking forward, they expect us to hold to that black line. It's mainly because of the preponderance of beans that's out there from the rest of the world. We are seeing that greater competition, especially in this case, Argentina has done some things to change their currency in order to incentivize their producers to look to the export markets. And so Argentina's been gathering some sales. We've also seen Brazil, gaining some market share as we look out there. And while we are still selling to most of our major markets, and especially in this case, China is actually buying about 10% more at this time now than they did this time last year. Overall, we're seeing a slowdown worldwide. And that slowdown for soybeans is especially concentrating in areas like the Middle East and North Africa. And you can think of this as being related to the war in Ukraine, in that while the war has disrupted agricultural production and shipping in that region, there is still product moving from that area. And so last year at this time, the idea is Egypt was buying significant amounts from us because of that uncertainty about what was happening in the Black Sea region. With the grain deal in place now, there's, if you will, a little more certainty, and there is more product moving out of the Black Sea region, and a lot of that is going to Middle East and North Africa. So that is replacing the sales that we had in that area last year. But as you look at our top, 5-6 markets here, like I say, it's very mixed. The idea is China and Mexico, Japan are all up, by double digits, but we're seeing significant declines, EU, Egypt, Taiwan. Especially as we look towards our smaller markets, represented by the other bar here, they're down as well. And that's the challenge here, is that right now things are sort of in balance, where in total we're just holding on to the pace that we had last year. And then going back, like I say, we expect that as we get out into the springtime, that we won't quite pick up the sales like we did last year. Now, when it comes to the corn market, the idea is we've seen global production shrink over this past year, but a lot of that shrinkage is due to us here in the U.S. As we look outside the U.S., yes, it's a smaller corn crop, but it's relatively bigger than what we've got here in the U.S. So the U.S. has much tighter corn market than the rest of the world does. Also, we're seeing a lot more, if you will, competition for corn in the feed market worldwide. There's a little more wheat available this year than there was last year. Other feed grains are also in decent supplies as we look around the world. And so those other feed grains are stealing some market share from corn when it comes to feed throughout the world. Now, as I look at the table here, you'll also notice that while, again, U.S. corn production has shrunk this year, as we look down South America again, there's this expectation that they will have larger crops, and those larger crops will make them, again, more competitive within the export markets. And when we look at our sales thus far, needless to say, on the corn side, I'd call them disappointing. We are running not only well below the pace of the last couple of years, but even well below our 5-year average. In fact, as we look here today, we're down almost 450 million bushels compared to that average, and darn near 700 million bushels compared to our pace this time last year. You go back to 2020, that was again our best export year in terms of the number of bushels of corn moving through the export channels. And you can see a couple of big jumps there in January and March that were driven by China. They were a major purchaser in 2020. They've fallen back through 2021 and now here in 2022. But I'd say the biggest challenge is not just China, it's almost every market we look at on the corn side. Whether I'm looking at Mexico or Japan or Guatemala and Costa Rica, we are seeing some sizable cuts in our export potential right now. And it's due to the fact that, our corn prices are relatively high compared to the rest of the world. We've seen the strengthening of the dollar as we look out there, and there's just a lot of other feed grains available to livestock producers throughout the globe in order to meet their feed needs as we look out there. And so we're seeing a sizable cut right now in export sales. And the challenge here is that USDA is saying that we're not likely to get back to that 5-year average. In fact, if you look at where they say we're going right now, which is about 2.075 billion bushels, the idea is we'll still be roughly 75 million to 100 million bushels below that 5-year average pace. So they're not expecting these export sales to really, buck up here as we're looking forward over the next 18 months. Now, with that, the idea is that means we should see lower prices as we look deeper into 2023 and 2024, and that's exactly what the futures market gives us. But we still see some sizable prices on the board there. In fact, as we look at finishing out the 2022 marketing year here, taking us if you will, to the harvest of this upcoming crop, we still see corn prices maintaining above $6 on the board. As we look at the 2023 crop, and the prices out there going into 2024, we fall below that $6 range, but we seem to hold on as we look out there. In fact, maintaining prices above $5.80 all the way out till harvest of 2024. So prices remain robust, but just not quite as strong as they have been throughout most of this year, moving up to this point. When we're looking at soybeans, we do see some strengthening of soybean prices on the board as we look out into next summer. Again, holding here in this case, basically above $14.50 per bushel all the way out until July. But we see that same sort of slide as we look towards harvest of 2023. Prices drop back below $14, but we're able to hang on above $13.50 as we look out there. So the outlook right now for 2023 is that, international demand is weakening, but we're still seeing fairly strong domestic demand. And with the weather concerns out there, we're able to hold prices at arguably what should still be profitable levels for next year's crop. With that, well, thank you for your time. Like I say, we do these videos about once a month as we look forward out there. This will be the last one for the end of the year, so I want to wish everybody out there a happy holiday season, a Merry Christmas, a Happy New Year, and may your marketing go as well as Santa can allow it to be. Thank you very much for your time. Again, my name is Chad Hart, Extension Economist with Iowa State University.